with the sale of stock with bonds. We have Pilsen Company issues 12% bonds with a face value of $10,000 and 6 shares of $10 common par stock in a combined sale, receiving total proceeds of $23,000 on December 31st. Record the transactions for each independent assumption shown. First, the common stock has a current market value of $21 per share. The market value of the bonds is not known. And then second, we'll do it where the common stock has a current market value of $24.50 per share. The bonds are selling at $98. So in this first case, we know that the market value of the stock is $21 per share. We don't know the bond. So that allows us to assign to the stock first, and then the remainder would be the premium or the discount on the bond. So let's look at that. I'm going to insert some rows here so we can do it in between. Ooh. That should be enough. Okay, so we'll just, before we get to the journal entry, we can just do some of the basic math. We know that we have 600 shares and they have a $10 par, so we're going to have a $6,000 common stock. And we know we're going to have additional paid in capital of the difference of the 21 to the 10. So we're going to say 21 minus 10, which we know is 11, but we're going to have Excel do it for us anyways, times the 600. So we're going to have additional paid in capital of 660. And so that allows us to then determine that the total stock portion of this transaction is $12,600. So we could then say 23,000 minus that 12,600 is 10,400 that will be allocated towards the bond. And we see that the bond has a face value of 10,000. So that shows us that we must have a premium of $400 on this bond. And so now that we've kind of broken down that information, it'll make it easy to actually do the journal entry. So we're receiving cash for $23,000. And then we're going to have a debit to our common stock, a debit to the additional paid in capital or APIC, the bonds payable, and also our premium on the bond payable. And I'm just going to indent all of those. And so our credit to the common stock, we calculated as 6,000. The credit to the additional paid in capital, we calculated 6,600. The bonds payable, we didn't type anywhere, but it's the full 10,000. And the premium is the portion allocated to the bond minus that 10,000 face value. And I did not mean for one. Oh, okay, there we go. All right, so now we have this second situation where the common stock has a current market value of $24.50 per share. The bonds are selling at $98. So now we have both values or market values for both the stock and the bonds. And so what we're going to do is calculate we're going to have to allocate the total costs among the two. And so we will do that by calculating the value of the common stock, which is equal to the 600 times $24.50 for $14,700. And then we'll also calculate the value of the bonds payable, which was 10,000 times 98%. Oops, got the 8 on there. and then we can add those together for a total value of $24,500. But we're only receiving $23,000, so we have to allocate this, or allocate the $23,000 across the stock and the payable. And so we can do that by determining the percentage. So we can say equals 14,700 divided by 24,500, and we get 60% belongs to the stock, so clearly 40% belongs to the bond. And then we can multiply that percentage times our 23,000. And we get 13,800 towards the stock and 9,200 towards the bond. And so then we can further break this information down, because the bond has a face value of 10,000, so this time we have a discount of 800, the difference between the face value and what we're allocating towards the bond. And then this 13,800 is going to be applied to common stock first at $10 per share, and then the remainder will go into the additional paid-in capital. So let's put that in journal form. We're still receiving the same cash of $23,000. This time we need to debit discount on bond payable, and we calculated that as 800. And then we'll still have a credit to our bond payable, credit to our common stock, and a credit to our additional paid-in capital. So for our common stock, we're still going to say it's equal to the 600 times the 10 par value. And then for the additional paid-in capital, we can say it's equal to the 13,800 that should be allocated to common stock minus the 6,000 that we have allocated, and we get a difference of 7,800. We could have also divided 13,800 by 600, and we would see that the price is 23 per share, and so we could have allocated 10 to common stock, and then 23 minus 10 gives us 13 towards additional paid-in capital. And so I'll just on the side do 600 times 13, and we get that same 7,800. All right, I hope that helps you.